Is it even possible to launch a legitimate, high-revenue U.S. business, open a U.S. business bank account, and accept payments through Stripe or PayPal if you are not a U.S. citizen and do not have a social security number? The answer is an absolute yes, but the path is full of hidden traps, massive compliance landmines, and administrative bottlenecks that shut down foreign entrepreneurs every single day. For non-U.S. residents, building a U.S. company remotely is not just about filling out a single piece of paper, it is about creating an entire operational foundation that satisfies U.S. state laws, the Internal Revenue Service, and strict financial compliance checks. This is exactly where Doola enters the equation as a specialized business-in-a-box service tailored specifically for international founders. The single biggest fear non-U.S. founders face is having their merchant accounts permanently locked, their assets frozen, or their tax status jeopardized simply because they made a mistake on state filings or IRS forms. When you operate outside the United States, trying to navigate U.S. corporate structure independently is overwhelming. You are faced with complex questions. Which state should you register in? How do you get a U.S. tax identification number without an SSN? How do you maintain a physical U.S. presence for legal notices? What happens when tax filing season comes around? Doola solves these exact pain points by acting as an end-to-end bridge between foreign entrepreneurs and the U.S. financial ecosystem. To maximize Doola effectively as a non-U.S. resident, the process begins with selecting the correct corporate entity and state. For the vast majority of international founders, particularly those running e-commerce stores, SaaS platforms, digital agencies, or consulting services, forming a limited liability company, commonly known as an LLC, in Wyoming is the most efficient move. Wyoming offers low annual state fees, minimal administrative upkeep, strong privacy protections, and direct asset protection. If you are planning to raise venture capital from traditional U.S. investors, Doola can instead help you form a Delaware C-Corp, which is the gold standard for venture-backed startups. Doola handles the complete filing process, including providing a mandatory U.S. registered agent and a physical U.S. business address or virtual mailbox, both of which are non-negotiable legal requirements for non-residents. Once your LLC or C-Corp is officially registered with the state, the next critical step is securing an Employer Identification Number, or EIN, from the IRS. This is where most solo founders hit a massive brick wall. Without a U.S. Social Security number or ITIN, getting an EIN requires filing specialized paperwork directly with the IRS via mail or fax, a tedious process that can take weeks or months if handled incorrectly. Doola completely automates this step by applying for your foreign-owned EIN directly with the IRS. Acquiring this tax number is the master key for your entire operations. It allows you to sign up for U.S. business banking and process payments globally. With your state formation documents and EIN secured, the next actionable takeaway is setting up your financial architecture. Through its integrated partner portal, Doola guides international founders step-by-step through opening a U.S. business bank account remotely, without ever requiring you to fly to the United States or step inside a physical bank branch. Having a dedicated U.S. business account completely separates your personal funds from your company funds, preserving your limited liability shield. Once your bank account is active, you can seamlessly connect your entity to global payment gateways like Stripe, PayPal, or Shopify Payments, allowing you to accept USD payments from customers worldwide with zero payment friction. However, forming the company and collecting revenue is only half the battle. The true long-term value of using Doola as a non-U.S. resident lies in ongoing tax compliance and corporate governance. Many non-resident entrepreneurs incorrectly assume that because they live outside the U.S., they have zero U.S. reporting obligations. In reality, foreign-owned single-member LLCs are subject to strict IRS informational reporting requirements, including Form 5472 and Form 1120. Failing to submit these annual informational returns can result in severe IRS penalties starting at $25,000, even if your business owes $0 in actual U.S. tax. Doola directly addresses this massive hidden risk through its tax and compliance plans, offering dedicated bookkeeping, automated transaction syncing, and expert CPA oversight to ensure your business remains in 100% good standing year after year. By utilizing Doola as a non-U.S. resident, you eliminate the guesswork, avoid costly filing errors, and gain a fully functional, legally compliant U.S. business entity from anywhere in the world. With that said, thanks for watching and until next time.